Guys, twos, tens, steepest since February of 18. And we did get a very brief a record high on the NASDAQ and the Russell. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. Yeah, yield curve steepening, and that's been a big help, of course, to the banks recently. Those Friday announcements really helping as well. Modest upside today, 4-1 advancing to declining stocks at the open. Take a look at the sectors. Little more, there's your 10-year note, by the way. You see that moving up like that. When you get at the over 0.9 there, 0.95, people start paying attention. Banks are up to on that. Energy stocks modestly on the upside, but they've been laggards, frankly. These cyclical names for the last few days, industrials as well, but they're modestly on the upside. And the more growth-oriented technology and consumer discretionary lagging a little bit. What people keep buying every single day, and I sound like a broken record talking about these thematic tech ETFs, but every day, clean energy and solar stocks and 3D printing and lithium battery ETFs and gaming ETFs. Just people love buying these. The creations of these ETFs this year have been titanic. Beginning about May, when we saw real big movements, a lot of money moving around in these sectors. We are not quite in fourth quarter earnings season, but it's starting, and I'm a little concerned by what I'm starting to see here. It seems a little cautious. So remember what happened in Q2 and Q3. We had huge beats for everybody, and we saw rising numbers and positive commentary. Q4 and Q1 might be a little more cautious because of the fact that we're entering this COVID winter for the next 4 or 5 months where we don't really know what's going on, but it seems like activity might be slowing down. I think CarMax yesterday had good earnings, but disappointing comp sales, and December was tracking down for them. So there's a little bit of an early warning sign. Here's another one. We've had 13 companies reporting. These are the early reporters. They have a November quarter ending. They've been beating these 13 companies, the Linares, FedEx, Costco. They've been beating by almost 10%. That's pretty good. But at this time, last quarter, they were beating by 28%. The beats were huge in the second and third quarter. These beats are much, much more modest. That's a second warning sign that we're seeing out there. Number three, if you look at what the earnings season is going to be, I would pay a lot of attention to some of these consumer names that have come out early. There's a bunch that still have a November ending quarter. They're going to report the week of January 4th. So Bed Bath & Beyond, Constellation Brands, and Walgreens, and Conagra, and even Carnival. Micron is, of course, not a consumer name, but pay attention to what those companies have to say about. They'll give November quarter, but they'll comment on December, and we'll see what's going on there. Delta will also be reporting, and then we really kick off on the 15th with JPMorgan and Citigroup. That's sort of the traditional start of earnings season overall. One thing I do want to point out, I think Mike mentioned this, is growth is beating value. Here's another data point that indicates people are still nervous. They flee back to growth after a brief value outperformance a couple of months ago. S&P growth has been beating S&P value. In fact, S&P small cap growth is beating S&P small cap value by a small amount as well. Small cap in general has just been having a fabulous month overall. Finally, just about the comments on the NYSE allowing direct listings with a capital raise. This is great for issuers, of course. More direct listings, I think, is good. There is some questions about the lockup periods for a lot of these direct listings. I think you're going to find that to be an issue. But remember something. It doesn't matter. These stocks are going to be treated as IPOs. They're going to go into the IPO ETF, for example. So investors overall should be fairly indifferent because people are going to be buying them in that manner through these IPO ETFs, and that's what's going to matter. And remember, Morgan, it's about the aftermarket returns. Some of these have done really well, direct listings. Palantir has. Others like Spotify and Slack, they took a much longer time to get up there. But overall, more public ownership, it's a good thing in general. Morgan, back to you.
Thanks, Bob. Some key context there.
Shepard Smith here. Thanks for watching CNBC on YouTube.